Hello traders, Gary Wagner here just before 1 o'clock in Honolulu, 6 o'clock in New York. It is Thursday, 8th day of February 2018, and this is the daily report for gold and silver. Tremendous sell-off in U.S. equity, Dow plunging about 1,000 points. Gold and silver also trading in the positive today, but not nearly as much as you would expect in a safe haven environment. Gold did close up $6.20. Trading at 1320.80, silver up about 13 cents at 1637, and that was with a fractionally unchanged U.S. dollar up 0.04 at 90.16. As I said, a 4-point decline in the Dow, 23,860, putting it down 1,032 points. A almost 4-point drop in both the S&P as well as the NASDAQ. Bitcoin did close fractionally higher today, closing at about 8,300. That is in the CBOE, and 8,315 in the CME's futures contract. Traders, what a day in the financial markets with the Dow Jones Industrial Average once again plunging over 1,000 points on the day, 1,044. We'll talk about that in a second, but first let's take a look at gold. The focus of today's opening letter was 50-50, in which I'm talking about two key technical indicators, one a 50-day moving average and one a 50% retracement, but both intersect at the same price point, but more importantly happen to be pretty much the exact intraday low that occurred when the market traded to 1309 on the lows of the day and then began to trade substantially above it, closing up about $6.10 at 1320, which is pretty much where the market opened at, as you can see by virtue of this doji, in which we've got the open and close identically at the same price point. Now, this tells me a couple of things, but most importantly, it tells me that there is a tremendous amount of support at this particular price, and it also alludes to the fact that this is a very critical price point that needs to be held if we can say with any technical confirmation that we are remaining in a bullish mode or bullish scenario. Now, we're looking at the green 50-day moving average. That happens to occur at 1308.30. 1306.70 is the 50% retracement of this prior rally. So what we're looking at is the fact that A, we have a very respectable correction, and in fact between here and 61.8% retracement, we could in fact see this market find support. And the fact that they both occur right at the same price point, I find rather interesting, because at the same time, when we look at the 200-day moving average, that intersects precisely at the 61.8% retracement level at 1291. In other words, my current market sentiment is if prices can hold above 1306, I believe we are still in a bullish mode. And if the prices go below this particular price point, which I happen to think has a fairly low probability of occurrence, but if it goes below this particular price point, I believe we should see gold trade to about 1300, 1291 in that area. Anything below a 200-day moving average is really a line in the sand in which we have to say that there's been a major shift in market sentiment from bullish to bearish. Although I am recommending that we remain flat with a neutral stance in gold, I am looking at a serious entry point if we get follow-through buying over the next day, which moves us above even 1322 on a closing basis. That would satisfy me in the parameters that we have in fact put in some sort of a tentative or short-term bottom in gold pricing. So traders, we have a very similar candlestick pattern in silver when we look at it, although I believe that the technicals are entirely different than what we're seeing in gold. In terms of the candlestick pattern that I'm talking about the Harami cross, which is an inside trading day, and the cross itself is because you got a doji rather than a small-bodied candle. It also occurred just above a 61% retracement level, 1636, and that means that we could have seen some sort of conclusion to the sell-off that occurred at the same time that gold began to trade lower. However, there's one key and defined distinction between the two markets, and that is that the 200-day and 50-day moving average are above the current price, first of all. Secondly, the 200-day moving average is still above the shorter-term 50-day moving average. And those are some of the reasons that I have been much more bearish towards silver than I have towards gold as they move down, and much less bullish in silver than gold as they were moving up. It's the fact that they are trading below these averages, and on a technical basis, we have to say that intermediate and long-term market sentiment has to be bearish in regards to silver. And traders, the big news, of course, is the U.S. equities continues in a meltdown, with the Dow Jones Industrial Average losing about 4% on the day, closing 1,032 points lower at 23,860. That is a tremendous move down. Traders, I have been involved as an industry professional since 1983, which means I survived the 1987 crash as well as the 2008 crash, and frankly, I've never seen anything like this. The sheer volume and the sheer volatility intrinsic in the market has been something that any long-term trader has to be taken back by. Now, the fact of the matter is we saw this market really beginning to sell off about a week ago, but then we had that really interesting clip up. This is Tuesday. Wednesday, it actually broke and traded for a short period of time above its 50-day moving average, closing below it. And then, of course, today, the market has been all over the board. And to illustrate that, we really need to pull up a short-term chart. And traders, I've done just that. Now, my particular charts come in Hawaiian Standard Time. So this is the beginning of the trading day. Of course, it occurs at 4:30 in the morning here, but that represents 9:30 in New York. And we can see that from the beginning of the trading day, we had this market drifting lower for about the first 3.5 hours of trading, take a slight clip up, although still trading negative on the day. But at this point, this is 9 o'clock in Hawaii, the Dow Jones Industrial Average was only trading off by about 430 points. Now, we can see that the market once again returned to lower drift mode, so to speak. In other words, on a 10-minute incremental basis, the market was trading lower, but it was the last half hour of trading that really was the final plunge, with the last 10 minutes of trading being the last nail, so to speak, on today's trading activity, trading off by about 1,000 points. A brutal day in U.S. equities, to say the least. Now, where could this market go to? Well, honestly, it's almost anybody's guess when you consider the way this market is traded. The one thing that we can say is that over the last 3 days, this break below the 50-day moving average is significant. And if the 200-day moving average does not hold, that would be a statement that is really a dramatic shift in market sentiment from bullish to bearish. We're not there yet. The next real strong target has got to be about 22,360. It's quite a ways away from current trading, but we have significantly broken below the 23% retracement in the Dow Jones Industrial Average. Could we see lower pricing ahead? Well, the short answer is yes, absolutely. Where could this inevitably find support? My personal feeling is that I would look for support to come in roughly at about 23,300 to 23,200, and that is based upon this sideways trading activity and a potential level of support should the market continue to trade under pressure. And traders, about the only market that I'm actually starting to become bullish about is Bitcoin. Recently, we saw Bitcoin have its final downside hurrah, so to speak, when on an intraday basis, this market actually went to $6,000 per Bitcoin. Of course, there was solid support in the market, and it closed higher on the day and very far off of the lows then trading into the mid 7,000s. From there, over the last 2 trading days, we have had small conservative moves to the upside, and it's these small moves that is really giving me some hope, because we really need to see this market build a base and to begin to move to higher ground. Right now, I believe that we have solid support, obviously at 6,000, also at 7,000 by virtue of this close and this open here. If the market continues to trade higher, we could see it track as high as about $10,000 per Bitcoin. That would be my current target. Traders, today the focus of our opening letter was looking at 2 key numbers, the 50% retracement as well as the 50-day moving average. Interestingly enough, they both intersect at the same price point, and most interesting is the fact that that price point is almost precisely the intraday low that we saw in gold. That is significant because that tells me that, at least on a technical basis, there's tremendous support in gold at that price point. And with the markets, the equities markets trading the way they are, I'm surprised gold hasn't reacted more to the upside. But we've seen the first real solid signs that this market is concluding that current correction, and we should see higher pricing ahead. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow.